And when you take a look at that, you'll absolutely, man, just get all freaking excited because, while you may only make $1,000 of cash for the year, you may pay down $1,000 of debt and may have appreciated $1,000. Well, shoot, that $1,000 is really $3,000. And so that's what it's getting other people. Also, you're helping other people in creating a housing need. They're paying down debt for you. I think it's the most incredible investment vehicle, if managed properly, in the whole wide world. The way that I looked at it, and I still look at it, is we create seeds of investment, all right, that can blossom into large cash generating engines.
Hello, and welcome to another episode of Global Achievers. Today's episode is for people who are interested in real estate. We'll have Stephenson joining us. He's a real estate investor with 4,000 units under management, and he owns 25% of those in some capacity. And these include single-family homes, small apartment communities, and large apartment communities. His primary focus is cash flow, along with long-term appreciation. It's a very fascinating interview, so stick around, we'll be right back. Hello, Kyle. How are you today?
I'm doing terrific. Good to be here. Thanks for having me.
It is our pleasure. Welcome to the S Factor. We have a very fascinating story with you. So we're going to get started. And I want to start off at 142 Patterson Avenue.
Absolutely. So 142 Patterson Ave was my first rental investment. And it was when I first got out of school, I had this obsession with owning real estate. And the reason at the time, and the name is still around, Donald Trump owned a bunch of real estate. And, being in my 20s, I always felt like, well, if Donald Trump could do it, why couldn't I do it? And I didn't realize that Donald Trump's dad kind of got the ball rolling with about $250 million. Like, I didn't know that. So I was pretty far away from that. So I had to read a bunch of books on no money down. So there's a book by Robert Allen. I think it was like, no money, buying real estate, investing in real estate with no money down. And so, all those strategies. So I ended up buying this duplex. And as I say, I'm originally from New Jersey. When people see you in New Jersey, and you have no idea what you're doing, they have no compassion on you, and it's all good. I'm from New Jersey. I get it. So I had a big sucker on my head. So the agent, I love to talk about the story. The agent who sold me the property was like, look, I went upstairs and there was no flooring. All there were a bunch of joists. So I'm walking across the joists. I mean, there's no subflooring, nothing. And the guy's like, I'm like, hey, so before you sell this to me, right, you guys are going to put flooring in, right? You're going to have not carpet, but flooring, right? So that somebody doesn't fall through the ceiling, right? And they're like, oh, no, Kyle, don't worry about it. Here on this street, they'll bring in their own flooring. They bring in their own subflooring. And I bought that hook, line, and sinker because I so badly wanted to do a deal. And very long story short, I did everything wrong on that deal, right? Bought it for the wrong price, bought it in the wrong economic time. Probably a pretty tough neighborhood to get the ball rolling. Had no idea what I was doing. Had a crappy second mortgage. Ran into the wrong people. I could just go on and on and on. And still, at the end of the day, that deal was the catalyst for my investments up until the past few years. And so that equity, that really learning a lot about real estate. I am eternally grateful for my experience at 142 Patterson Avenue.
That's a very interesting story. And I think that, that's how a lot of people begin. It is with that first unit. I think a lot of people make all those mistakes as well. And, they persevere, they move on, and they build, right? And that's what you have done over the years. So tell us about your portfolio at the present time.
Sure. So, and I'm gonna probably give like like the 2 minute story on how we got to this portfolio, right? So 142 Patterson Avenue, fast forward, right? Even when you do everything wrong, over time there is inflation, rents go up, right? Your mortgage stays the same. And if you have tenants that help you pay it, you pay the mortgage down. So you generate equity. So we were able to 1031. It took several years, but we were able to 1031 or tax exchange into some other properties. Those other properties then generate more rent. And so we were able, I had a sales job and I continued to buy properties and trade up on properties over a 15-year period. So this was not a get rich quick scheme. Okay. I don't want anybody to think that. Okay. But we started to learn how to buy properties right, buy properties that had flooring in it, jokingly, right? And, um, and then some friends saw, hey, Kyle, you kind of know what you're doing a little bit. Do you mind if we get on the train? And so, I learned how to do partnerships and just learn from people who had more experience. So, um, we had actually grown the portfolio to about 400 units in 2007. So again, 15, 16, 17 years but it starts to roll on itself. Okay. Starts to compound on itself. So then came the Great Recession. And that's when a bank would not lend you money for crap. Okay. And so what we decided to do then is go call on banks because people were defaulting on their notes. They couldn't pay their mortgages. And so we were able to learn how to manage individuals' properties like that weren't paying the notes. The banks would have us develop relationships with these people so that we could then help those individuals become current on their mortgages, if that makes sense. So I was a salesperson, so I could go sell to a bank and then go sell a management agreement and get somebody current on their mortgage. So I developed a really good relationship with bankers and then just kept continuing then to do more third-party management and then being opportunistic if people were struggling or said, hey, we've had our fill of owning or managing property, we would maybe buy things. And so now, we're fortunate enough, we manage approximately 4,000 units in Virginia and have several hundred clients and, we do partnerships and help people understand the value of their properties. And it's been a wonderful run. So we have a great family here in Richmond, Virginia, that helps to manage this stuff, and I'm very grateful that we've been able to create a culture of people who are excited about real estate.
Awesome. So, a couple of different things I want to just go back on. The first thing I wanted to clarify was that's 4,000 units under management, correct?
Yes.
And how many units would you say you own outright?
Yeah, so I have equity or ownership in about 25% of those, and I could own 100% of it. I could own 50% of it. I could own 25% of it. And so, and it could be a single family home. It could be a duplex. It could be a community. It could be a small community that's 50 units or a larger community. So it really just depends. But in any deal, I am the largest investor. So that has been our philosophy, it's been my philosophy. So in any of these deals, I invested more than anybody else.
Okay, got it. Excellent. That is a very substantial portfolio. Which year did you go full time into your business? Because as you mentioned that you were in a sales job, and when did you quit and say that, you know what, this is my business and this is what's going to be my full time thing?
Yeah. So I'll tell you a little bit of a story because I had this
Sure.
fear, right? I had this
Mhm.
fear of always like the world imploding. Okay. And so I got a guy to help me kind of with that. I'm going to call him a business coach. And so we would talk about what the worst case scenario was. Like the worst case scenario wasn't that I was going to die, right? It wasn't death. It may feel that way, but it wasn't. So I started that conversation probably again. I'm a little older now. Okay, so I started that conversation in like 2005, and it took me like 3 years. So I finished up corporate America in 2008. And if you think about it, and I had people there like, hey man, like everything's gonna be fine. You work your butt off. Well, 2008 was the crash. So I stopped when the crash began. And then people are like, well, uh, sorry that you kind of stopped now, because it was really, 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 really rough. But you suck it up and you just stay ultra, ultra, ultra focused and keep blinders on what the end game is. And for me, I wanted to continue to manage and own property. So and I'm not going to tell you that I didn't have sleepless nights or that. I mean, there were times I felt, that I was going to die, right? Like I was really, 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 really terrified, but uh, I came out on the other end. But it was really, really for me, obscenely terrifying. I don't
Hmm.
know if that's good or bad for this podcast because I was terrified.
No, that
Because I was terrified. So I'm just telling you the real deal.
and you know what, that's what we expect, right?
Yeah.
That's reality. Because it's never going to be like a straightforward ride to success. There's always bumps on the way and things like that. So one thing I wanted to know is that I know I and just by talking to you, I know that you're like super passionate about real estate. But what is it with real estate in particular?
Yeah. So I think real estate is it can be one of the vehicles for what I call the equalizer of wealth. And what do I mean by that? I mean that if I am an average American, okay, and I say average, I have an okay job and I'm willing to live a pauper's life. And by pauper's life, it may mean um I shouldn't even say this now because nobody watches TV probably except for me, but like no television, like no really subscriptions to anything, just like be ultra focused and committed to something, save some money, invest in real estate. The beauty of leveraging in real estate, so you got to have okay credit, all right? But the beauty is that leverage allows you, okay, to increase your return as long as you buy it right. You can generate returns equivalent to people who make a lot of money, okay, but may stick their money in the stock market and make 7 or 8%. So it's the magic of leverage. The other thing I like about real estate is that it's a hard asset. What do I mean by that? I can touch it. I'm in an office right now that is real. There is some value to this. It's tangible. Um, uh, a the stock market, for me, I'm not saying that equities aren't a wonderful place to be, but it's a little bit more nebulous. And by that, I mean, the markets, if I understand it's an investment, but the P&L, people may be able to manipulate the profit and loss statement in a certain manner, and that impacts uh, uh, um, the value of those equities. Real estate, I mean, it's a house, right? You can see it, you can touch it. I like the tangibility of it, and I like the fact that an average person, all right, the way that I kind of thought about it was, shoot, if I own this home when I'm 20, all right, when I'm 50, it's going to be paid off. And if I need the rental income from that home to do something, what's the rental income going to be? It's going to be twice what it was, worst case scenario, that it is now. So if it was $1,000 a month, it's going to be $2,000 a month. And I can use that to supplement my life. And so that's what it's getting other people. Also, you're helping other people in creating a housing need. They're paying down debt for you. I think it's the most incredible investment vehicle, if managed properly, in the whole wide world.
So well said. And one thing that resonates with me, what you said, is that it's a hard asset. So it's not an NFT. It's not something in the digital world. You can actually touch it. It's a hard asset. And the fact you talked about leverage is so important in that regard. Excellent. Very well said indeed. So I just wanted to understand a little bit about your mindset and the strategy that you have in place as you have grown your portfolio.
Yeah. So there's a very basic strategy, and admittedly, it is focused around time, meaning that time is your friend. So that if you're a little bit older, just you have less time, right? That's just the way it works, right? So the way that I looked at it, and I still look at it, is we create seeds of investment, all right, that can blossom into large cash generating engines. And so, what I believe, and it's kind of hard to do it on a podcast, so you probably need some graphs and charts and stuff like that, but I'm going to try to make it sound simple. If I buy a single family home and I buy it for the right price, over time, I'm paying down debt, right? And there's inflation, and I get depreciation. I get some ways that I can offset even some of the income I make on my job. And I do that, a few times. Next thing, all right, and I'll look at, I have a little index card that I keep. It used to be a little index card, but I still keep an index card, and it'll say, on the top, it'll say in 3 columns, it'll say the address, it'll say cash flow, equity, and appreciation. And what that means to me is, how much cash am I getting off that property? How much equity? In other words, how much am I paying down the note? And how much is the property appreciating? And when you take a look at that, you'll absolutely, man, just get all freaking excited, because while you may only make $1,000 of cash for the year, you may pay down $1,000 of debt and may have appreciated $1,000. Well, shoot, that $1,000 is really $3,000, right? So that gets you. So I look at that, and I look at that actually every single year for everything that I touch. Okay. And then let's just say it's 5 or 10 years. I may have $50,000 of equity in a home. Well, I can leverage that, and the government, at least up till now, wants us to reinvest that money so that you can do what we call a 1031 tax exchange. Again, you have to work with an accountant or somebody certified. That's my disclaimer. But you can trade up, okay, that $50,000 in equity into $250,000, right? Well, that allows you to pay down more debt. In other words, generate more equity, better appreciation, and more cash. And if you do that a few times in your lifetime, life is pretty flippin' good. So that is my approach, always to plant seeds that will allow trade ups in the future. And that is the way that I've lived my life. That's the way that I've thought of it for my, since I've been doing this. So forever.
Awesome. Thank you so much for sharing that. That will be so valuable for a lot of people. So, in order to manage such a large portfolio, obviously you have a very big team. What is the size of your team right now?
Right. So we have 80 people on the team.
Mhm.
Um, uh, we're always looking to make sure people are committed to the cause and have a passion
Mhm.
for what they do within the company.
Mhm.
So, if they're a maintenance technician, I really want them to be all in on maintenance, right? I don't want it, as we're talking, it's funny, I spoke with an employee um, today who we had a sewer line break last night, and this is a new technician. And so the property manager said, well, the technician left while the sewer line people were there. And I'm like, look, I mean, he should want to stay, right, to understand what's going on. So long term, right, he's familiar with properties. But I said this, I said, look, let's get an idea if he's here for a job or a career. And I'm okay either way, but it just lets me know what our commitment level or what his goals are. Um, and so we really want people that are passionate about what they do. They're not just here just for a job, but they really want to learn and they care.
Excellent. I think that would be one of those behavioral traits or culture fit, which sort of sets people apart. Because if they're not passionate, they can't be part of your team. And I think that is also part of your recruiting strategy as well. Correct?
Correct.
Okay.
Correct. So we're looking for that passion. We're looking for people that want to continually learn, want to work collaboratively. Some people want to work just by themselves. We don't. We're more of a collaborative community. We're not a remote type of company. There are companies that are, hey, it's great to work remote. That's not our gig. Our gig is, we want to have happy hours and go out and bowl, or I shouldn't say drink beers because I get that gets us in trouble. But I guess we can have a couple cold ones, at a sporting event or something like that, and just work hard and play hard. That's our environment. That's our culture.
Okay. Excellent. So here's one thing as we wind down. I think this will be of some value to people who are watching. Is that um, say a married couple in their 20s, they buy their first home, and perhaps they're renting out the basement or a separate unit in their home, and that sort of helps them offset some of the mortgage and things like that. Now, at this stage, what would be sort of like a game plan if they're looking 5, 10 years ahead, where they're trying to create their own little portfolio? What should be the game plan in your opinion?
Ooh, gosh, you get me all excited. So if they're renting out their basement first, so I would say, all right, again, how are we going to live? Babe, how are we going to live like paupers? We're not taking that dough, right? Because that's the other part. We want to take the dough and have good times with it, right? Like, hey, it's Friday night and I got like an extra $1,000, right? So the first thing is that we're going to try to live like paupers. Okay, got to do that. We're going to take that money. We're going to have a vision. We want to get our own first rental because a lot of times the place we're living in won't necessarily make the best rental. So that's a whole nother conversation, right? So we want to understand what would make a really great rental. We want to accumulate money, okay, off of that basement rental. And we want to say, and we write it down. Okay, you got to have the goals written down. All right. That's a non-negotiable. If you at least write the goal down, you're probably, well, you're probably 80% ahead of everybody else. Because I guarantee you right now, if I go out and start just randomly asking people like a nutcase, okay, hey, do you have any goals written down? I guarantee you they say no. So first, write that goal down. So let's just say that we want to own our first rental property in the next 24 months, and we know we got to get $20,000 for that. Now, all of a sudden, okay, and we hold each other accountable. The husband and the wife hold each other accountable, right? We then accrue that, and we're visualizing and we're writing down and we're talking about it every day. Every day, okay? We're internalizing it into our subconscious, all right? I would say that that's the starting point. And then you start looking, you say, okay, with that $20,000, what can we afford? What can we work with? But we write all of this down so that we're thinking about it on a subconscious basis, all right? And that we can look at it. And so that would be the thing. If I would say, hey, on this podcast, what are what are some of the keys? It's to write it down and then to stay focused and know, you say it with your wife or whatever, we're going to own this rental. We own this rental property. We already do. It's just, it's 20, it's 2 years from now, we own it. Okay. That we're in that we've already internalized it. So that would be my recommendation to get the ball rolling. And to be just ultra focused, right? What else is going on? Especially when you're in your 20s. I understand that there are a lot of things that can be going on in people's lives, but I think, and this is just me being a little bit older, there's a lot more going on in my life now than there was, when I was in my 20s.
Yeah, very well said. And I like the whole part about writing things down. I write things down not because I'm going to forget them, but what it does is that it serves as a reminder every time I look at it, whether
Right.
it's a goal, it's a thing to do, it's a project, whatever it is, I like to write things down. And it really helps me a lot. So, Carol, thank you so much for the value that you have offered to our audience. And before we end today, do you have any final words?
So, I would like to say to anyone listening that, the world is your oyster, especially if this is in the United States. Okay. So, the United States is a capitalist world. It's designed, or capitalist country. It's designed to generate revenue and cash. That's what it is. It's not like some other countries. And so, if it's something you truly want to do here, it can happen. And there are plenty of obstacles, and there are plenty of, you're gonna get hit over the head. Chances are, unless you're lucky that you don't. But this is a wonderful, wonderful place to create long-term wealth. I don't know about short-term wealth. I have no concept. Can't teach you about get rich quick, but I can tell you, if you write that goal down and then you grind and grind and grind, that it'll be amazing, what your outcomes and your vision and what you've written down, what will happen, over the next 20, 30 years of your life.
Excellent. Excellent advice indeed. Thank you so much for your time today, the value that you offer to our audience. And Kyle, I wish you all the best with your business.
Thanks so much.